Welcome to this Killick Explains video, and I'm afraid welcome back to 8 more investing lessons from the fall and imprisonment of Sam Bankman-Fried. Now, why am I going there again? Because some of you might remember I've done more than one video around this topic of Bitcoin, crypto, and the collapse of FTX. Well, the quote next to me, which I won't read out verbatim, I also have relatively young kids, tells you why I'm going here again. All right, this is a topic I will keep revisiting, which will annoy the Bitcoin fanatics out there, no doubt, and I will keep pulling lessons from, and as I say, the quote next to me, if you take a bit of time to read that, will summarize why. So, 8 more lessons coming up, and I'll go through them fairly quickly. At the end, sources of more information as usual. And they are, first of all, never gamble big on high risk stuff. All right, and in the high risk bucket, we can put crypto. We can also put single meme stocks. If you remember the whole Robin Hood saga from around the time of the pandemic. We can also put, for most people, all commodities, okay? And we can put currencies, all right? And we could add high risk stocks and so on. Do not be a gambler. Investing is not gambling. Okay, I've made the point before. I'm making it again. And Sam Bankman-Fried demonstrated why potentially. Secondly, buy what you know and understand, or give that job to somebody you're pretty sure does, or don't bother. All right. Now, a lot of people think they understand cryptocurrencies. The vast majority certainly do not. And there are lots of patronizing people out there saying, if only you understood it, you'd be filling your boots with it. I don't buy that argument for 1 second, okay? And I don't buy the argument that it is about to replace the US dollar overnight, okay? It is not a store of value, all right? It is way too volatile for that, okay? It is not a medium of exchange. You still can't easily convert it into normal currencies. You can't easily convert it into tangible goods and services, despite what its proponents claim. And for anyone saying, well, currencies are also volatile, Tim. Yes, they can be. But to paint a picture, while this video is being made, basically April 2024, Bitcoin at best has a daily volatility that's 14 times that of the US dollar, which fans claim it will one day replace. Next, please avoid any products, and crypto is not alone in this, backed heavily by celebrities, any of them, politicians, any of them, and financial high rollers. All right, by which I mean successful people, millionaires, billionaires, but they're drawn to the party for different reasons to your average investor. You know, you don't have anything in common with these people. The advertising campaign is trying to draw you in and say, if you buy this, you'll almost be connected to some of these people. You'll be like them. You won't be, and certainly not by throwing away a pile of money on something like Bitcoin. Next, something I've said before needs saying again. If you get an asset that features rapid price growth and volatility, which means it does this, it's dangerous, not something to jump into, okay? And people say, oh, in the early days, all assets are volatile, so you need to live with that. I don't buy that argument either. If you don't understand it, and you understand how it's priced, how it's valued, what's happening, you are taking a punt. Red lights should be flashing. Next lesson, none of us get rich quick, all right? Now, a few people do, a few. They tend to adopt something very high risk very early. They get relatively lucky and they make it to the finishing line. They don't sell when the asset dips, for example. So take, Google shares. Lots of people could say, if you bought back in the day, yeah, but how many people bought and then hung on all the way through while they lost 80, 90% on the way through, all right? So what you get is early adopters and survivorship bias. And that's where you get the stories from. Look at the size of my crypto wallet, and this will be someone who got in early and managed to hang on in there as the roller coaster went up and down, right? That's not many people. It's probably not you. Next, if something's not well established, don't think, ooh, I've spotted a gap in the market. Avoid it, all right? I'm afraid here comes a very brutal message. You probably do not have an investing edge. You don't have an information edge because in some cases that would be illegal. It's called insider trading. You don't have a speed edge. You'll never beat an algorithm. You'll never be an experienced veteran, a whale in any of these markets. And you're not prepared to take more risk than other people because you probably will go bust before you can close out the position. All right. So if you think you've got an edge, think again. Next, this time will not be different. So I've taken a quote and changed it there. All right. Only ever buy into data, not stories. All right. In financial markets, there are people trying to sell stories the whole time. All right. They're not often backed by data. They're backed by promises of data, promises of what could happen, promises of profit, promises of cash flow that may never materialize. So buy data, not stories. And finally, the old chestnut from me, diversify. Spread risk. All right. Never pile into a single asset hoping it will transform your fortunes overnight, because it may well transform them, but not in the way you expect. Rebalance. Don't let your portfolio get dominated and skewed by one asset. Don't tinker with it constantly. There's a balance here. So be systematic. Set up a well-diversified portfolio containing different asset classes and different assets within those asset classes, and then systematically adjust it, not too often, but often enough to keep it on track. Okay, lots of messages there. Some of them a little bit gloomy, but I make no apology for that. Further information, killick.com/resources. And you can also email me if you wish to, editor@killick.com. Those resources again, Killick Explains videos, the how-to guides, one in particular on how to invest in equities, and our quarterly magazine, Confidant.